Am I live? Just got to get my cup of coffee if you guys are there. Let's say hit stream here. I've forgotten. Do I hit? Normally I have to go to YouTube and do a bunch of stuff too. Guess we're here? All right, let me get a cup of coffee. Let's do a warm-up song. What? Where'd my music go? Gotta get my mojo. All right. All right. How you guys doing? If I said it, then I meant it. That's my favorite line there. I walk around the house saying to the kids, if I said it, then I meant it. Happy Non-Farm Payrolls Live year 14. It's our 14th anniversary today. You look beautiful. Thank you for being here. Thank you for being you. What's up, Nevis? What up? Wally's in the house. All right. Hey, it's the end of the world. The beginning of the zombie apocalypse. Our new future is here. The world is crazy. It's out of control. There's nothing you can do. You're totally vulnerable. Oh my God, what if you lose your job? There's nothing you can do. You're going to be kicked out on the streets. Your children are going to starve. Oh, wait, you know what? That's not us at all. Whoa. Whoa, I got to move. Give me the juice. All right, that's not us at all, is it? No, here's the interesting thing. I feel like I'm way too close now. Hello. Here's the interesting thing about our lives. Look at this camera. It's funny. I have to slouch down. You know, the interesting thing about our lives is we do have control. You can open up a laptop and make money. Your neighbor loses their job, they're out. They starve. They have to do something. They got to hustle. They got to take. I don't know. They're just on their own. You are different. You have an opportunity in front of you. You open your laptop and you can make money. I've been self-isolated for 20 years working out of my home. Now, it's true I've had offices here and then, but I always like working at home. This is it. So nothing's changed for me. But I want you to think about this, that while other people around you don't have an opportunity to take care of themselves, you do. And this is a great example of when stuff, that we call an exogenous shock. This has nothing to do with you, your life, your neighbor's life, how they live their lives. This is just something outside of their control. And now they're suffering and there's nothing they can do about it. But you can open up your laptop and make money. I want you to think of how powerful that is. Okay, this is even more than money. This is being able to survive and maybe even thrive. So I want you to think about that. How lucky you are. That's the name of the song. Lucky you. Right? Lucky you that you have this opportunity in front of you and that you can take care of your family and your loved ones and be an inspiration to those around you. So here we are. Thank you, FX Street. Year number 14 has now begun. For just this webinar, I've been working with FX Street for probably 16 years. Pretty cool. And I remember our first meeting 16 years ago. And we talked about what can we do that can make a difference in people's lives. That's what the conversation was about. What can we do that will make a difference to people's lives? And so having done this almost 170 months in a row, I hope we're making a difference. And I just want you to even think about that. Other people that don't even know you got together 16 years ago before you probably even heard of Forex and said, what can we do to have a positive influence on your life? So I'm very grateful to have FX Street in my life. I'm very grateful to have you in my life. I'm very grateful to be a Forex trader. There's a lot of people that are in a world of hurt. And right now, just having the opportunity in front of us to be able to take care of our loved ones is such a blessing. So thank you for being here. And thank you for the world's greatest moderator. Whoop, whoop. Moderator, best moderator of all moderators. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to today's webinar. Let me remind you that the purpose of this webinar is education. This is not an alert service. I am not here to make trade recommendations. I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky and not appropriate for everyone. However, your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Wow, what a great disclaimer! They say I sound like a chulo! So by the way, my name is Wayne McDonell. Nice to see you, nice to meet you, nice to hang with you. Today's webinar is going to be 3 hours long, and we will cover technical and fundamental analysis with an overriding goal of teaching you how to plan your trades in advance. I'm the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange brokerage that would like to earn your loyalty and respect. See, they also want you to succeed because, look, if you're a successful, profitable trader, you're a better customer. It's a symbiotic relationship. If you do well as a currency trader, they'll be more profitable. So they're like, hey, man, we can execute our trades quickly. We offer awesome spreads, right? Our swaps are huge. Now we just want to make sure that our clients are successful, because if they are, they keep trading day after day, week after week, month after month, year after year. So that's where I come in. So I want to teach you how to trade successfully. It doesn't mean you're going to be successful. But everyone here, FX Street, Traders Way, and myself wants you to be a success. It's a symbiotic relationship. We actually need you to be a success. So think about that. So if you learn anything today, if you have fun today, if you just like throwing your diamonds in the sky, throw your diamonds in the sky, then please visit tradersway.com, open a demo account, download MT4, throw down some practice trades. You can see the fast execution speed, narrow spreads, wide swaps. Look, if you're a scalper, you might prefer to have a fixed spread. Okay? So you can open a fixed spread account. Most people open up a variable spread account, which means 99.9% of the time you're going to get a smaller spread because the market can give that to you. It's part of being in the interbanking system. If you hate paying spreads, go with the ECN account. Okay, so whatever you want. So today, please treat your fellow currency traders with respect and dignity. If you got negativity, check that at the door. We're not interested in your sob stories or your bad karma. So go find that Bitcoin dude that drops F-bombs every 4 or 5 minutes. Go heckle that dude. He'll love the extra view. What else is going on? So we got this thing called non-farm payrolls. Hey, the economy is, jobs are bad. So we already know that. So how bad? Well, actually probably not as bad as everybody thinks, but we will cover that live. And that will happen in about an hour. So we'll get all set up for that news. So then an hour will go by. And then I will spend 2 more hours working with you. This webinar today is 3 hours long. 3 hours long. So I hope I have an opportunity to answer your questions, cover the topics you want to cover. And again, the raison d'etre that Traders Way is looking for, that FX Street is looking for, and that I'm looking for, so we find at least a small opportunity today to make a difference. So let's get on with it. You guys excited? Three-hour webinar. Yeah. Very, very cool. Let me get, thought maybe I can get PowerPoint. Hang on. Oh, I know what I did wrong. They say I sound like a chulo. Why doesn't it come up? Oh, there it is. No, it just went away though. Gee whiz, I just saw it. Where did it go? This is so funny. I guess this is what it'll be. Boy. What's a chulo? Good looking boy. There we go. Cool. Cool. Look at that. Neat. I look old there. Oh, this is a cool slide. I keep forgetting about this one. Look at that. So trading non-farm payrolls 2006. How amazing is that, huh? Thank you, guys. So anyways, yeah, so your customer says, hey, wait, every other website says jobs will be bad, dollar will be strong, you sell euro dollar, that's, yeah. Okay, cool. Well, how is non-farm payrolls calculated? First of all, there are 2 surveys, a household survey and an establishment survey. And they start calling throughout the month, gathering data. When did things start getting bad in the United States of America? Well, what would you say, about the 23rd of March? So like 2/3, maybe 3/4 of non-farm payroll statistics will not be affected by the coronavirus. So I don't think it's going to be as bad as people are thinking because they don't know how the number's calculated. So it won't be good faux show, and we already know that. Do you think anyone's going to be surprised? Like, oh my gosh, that's a bad non-farm payrolls. That wasn't 200,000. Yeah, like we already know all that, right? And I think a lot of people are preparing for the end of the world. Now, let's be factual. 10 million people have lost jobs in the United States. In particular, the service sector. Now, my neighbor is building a 15,000 square foot house, and they work every single day. The plumbers are there, the electricians are there, the swimming pool guys are there, the gardeners are there. They're working every day. So it's kind of interesting. Me. Kind of interesting that who loses their job, right? One of the things my family's been doing recently is trying to order food out from restaurants simply to keep them alive. But I think as of Monday, that's not even going to be allowed anymore. So they are legally shutting my city down, which is really interesting because we've been quarantined for what, 3 weeks? School has been canceled for the entire year. And now there's a forced, quarantine. Like, well, what the hell were people doing before? Right? So anyways, so things are getting pretty bad here, and I won't even be able to get my Vietnamese food delivered anymore. Right? What are we going to do without Uber Eats? So anyways, 10 million people have lost their jobs. 10 million more are likely to lose their jobs. So we'll see in the next few weeks. Okay? Where do I live? I live in paradise. We call it America. Okay? We're lost a job in, yeah, wow. Yes, Harvard's not closed. Harvard is completely online now. Okay, I still have schoolwork up the yin yang. So anyways, guys, non-farm payrolls is going to be bad, but not necessarily as bad as everyone thinks. Bad is already priced in. Maybe not as bad as not priced in. But the thing is, one of the themes that you're going to have to think about over the next 5 or 6 weeks is that there's a difference between the economy and the market. And the market is always ahead of the economy, at least 6 months in advance. Okay? So right now, the market is trying to figure out where we're going to be in 6 months. And once they start to figure it out, the market's going to take off. And so we're going to have higher, infection counts. We're going to have higher death counts. We're going to lose more and more jobs, but the market is going to go up. Okay? Do you understand that? So you need to start picking your prices. And by market, I mean long-term charts on Forex, but even things like the bond market and the stock market. Okay? The bond market is heavily influenced by the central bank right now, so maybe that's not as good of a leading indicator as it typically is because the bond market is considered smart money. But right now we got the Fed in there doing their job, and that's not necessarily an equilibrium point between supply and demand. That's the Fed going in there. Now, what is the Fed doing? The Fed slashed interest rates all the way down to zero already. They're doing some quantitative easing. Okay, that's fine. But ultimately, that's not to create jobs. That's not to stabilize the economy, so to speak. I mean, well, let me say that differently. It's not to address inflation. We have zero inflation. That's not necessarily them attacking inflation. And also, they're required to keep jobs high. Unemployment is going to go up to 10% or more. Nothing that the Fed is doing is going to affect that. So what is the Fed doing right now? Okay? Well, it's not necessarily playing in the bond market to keep, like I said, have inflation go up and have employment go up. No, actually what they're doing is keeping the financial system functioning. Okay? That's providing liquidity, keep propping up the repo market, keeping banks solvent, all that kind of stuff. So typically we would look at Fed action to understand what the near future, or by near future I mean the next 6 months, is going to be like in the United States of America. And right now, all those things are not the typical. It's not typical behavior. We're not in typical situations, and therefore you wouldn't do now what you typically would do. Okay? So you got to think a little bit better. You got to think a little bit farther out, and you got to put this idea that you have to separate what you read on FX Street as far as the news is concerned, and then when you're looking at the charts, you'll see there's a dichotomy. They're quite different. So you might see bad news, but here's the interesting thing. Over the next 2 or 3 months, as we get together for more and more non-farm payrolls, you will find that good news will be bad news that's not as bad as people thought. Like, when are you going to get good news? Like, we're adding jobs and the economy is roaring back. That ain't going to be for a while, right? But the good news will be bad news that's not as bad, which is good. And you're going to get bad news that's going to lead to good news type response in the market. But bad news is bad news when as far as the economy is concerned. Do you get that point? Okay. Stanton says, Fed is adding money to the economy to prevent inflation. Actually, that makes no sense. They're adding money to the economy. If you want to take that argument, you would say to create inflation. Okay. So anyways, but that's not what the Fed is doing. The Fed is keeping the system functioning. Really, if you think about it, the Fed has a dual mandate, but it really shouldn't, right? It really shouldn't. It should just be like, keep the financial system healthy, right? And you'd think maybe the government should be worried about the economy, right? So what's supposed to happen is the government's supposed to increase spending. If you're a Keynesian, okay, you believe that government's supposed to step in and spend, which they are, trillions of dollars, but then they're supposed to jack up taxes later on and get their $1 trillion back, which of course doesn't happen. So that's one of the major problems. Cool. I gotta move. I gotta move. Give me the juice. So anyways, we're very blessed to be able to take care of ourselves and all that kind of stuff. And so many people are not in that situation. So please don't waste this opportunity. Okay. I have a macroeconomics degree from Harvard. I am to receive a master's degree in May, and they canceled commencement. Isn't that nice? So they're just going to mail me my master's degree. It's just going to show up in the mail. Like, hey, congratulations, you won the lottery. Yeah, isn't that kind of sad? Can you imagine going to Harvard College or Harvard Law School or Harvard Medical School or whatnot, and you just, like, one day you're done, and like a piece of paper shows up in the mail like, hey, thanks for your 4 years. Thanks for your $300,000. And that's that. There's no conclusion. There's no party at the end. You don't get to throw your hat in the air. Yay! So I'm very glad to have already done it. Do it once. So that's kind of sad though, isn't it? So a lot of people are going through this. And it's tough because as a student, let's say, your identity becomes part of Harvard. You're a Harvard man or you're a Harvard woman. And just to have it end is kind of, it's an empty end, right? It's empty. There's no denouement. People also do this with their job, right? Their personal identity and sometimes their self-worth is tied to their job. So people losing, like 10 million people losing their jobs in America overnight is shattering for many people. Very shattering because now they've lost their personal identity. There's nothing to do in the morning. There's nowhere to go. And if you're worried about money, there's nothing you can do. And what a frightening place that is, especially if you do have children, right? You're just like, I'm sorry, daddy, or sorry, I'm sorry, kids. No one will pay daddy money. I've looked around, I've asked, I've begged. People won't give daddy money, so I'm sorry, but no food today. What a horrible situation. So much better to just be open your laptop and say, well, daddy's going to work extra hard. He's going to trade Shanghai. Daddy's going to trade gold in Shanghai to pick up some extra money. Okay? Am I going to do my PhD? No. I thought about that, and I actually know the guy that ran the program at Harvard Business School, the PhD program. Military guy, by the way. Really interesting dude. Top notch. I did a leadership program with him. But no, because I love economics. Well, first of all, economics and trading are not necessarily the same thing. I love it, but the higher your education gets, the more esoteric it becomes. And I think if I got a PhD in economics, it would take all the love and joy out of it. And so I don't want that. I don't want it to be esoteric. I like it because I translate it into how the world works. And many of the models that are taught are just frankly wrong. And I've already fought all the professors over that. I'd hate to have to go through a PhD program and regurgitate all the crap that they teach. So I don't know. The reason I went back to school and, pick up this, why, like, let me reshape it. Why would I go back to school in my mid 40s? Well, my children are young, and the day they started to bring homework home to do homework, I applied to go to an elite program at Harvard for executives. They accepted less than 1%. 3,000 people applied, and they took 20. I was part of the 20, and now that the program is wrapping up, I've taken 30 something classes now. 30. Now that we're just wrapping up, I'm in my last one or two classes. There's only 9 of the 20 left. And they've canceled the program because it's too difficult. But why would I do it? I wanted to be an inspiration to my children as they were learning the importance of education and learning the lessons of hard work and sacrifice and focus. They see me studying over weekends and holidays. If I'm going to see them do like a musical performance at school, while all the other mummies and daddies are in the hallway talking, daddy's leaning against a wall reading his tablet because he's got homework to do or case studies to review. I don't waste time. I don't waste a minute, right? And they see it. And then I'm a star student. So I graduated, near the top of my class, dean's list and all that kind of stuff, right? Summa cum laude. So anyway, so that's why I did it. And it's funny because I'm almost done and I'm already missing it. So anyways, not a bad thing to do. Go to Harvard to be an inspiration to your children. So anyways, cool. So let's get on with it. Let me describe myself as a trader. I am a macro, right? A global macro focused trader that trades trends. Okay. I use macroeconomics to study the health of economies around the world, and in particular, their central bank policies. Okay. And I understand global money flow. I understand seasonality and business cycles. And I put all this together to form a fundamental bias. Once I have a fundamental bias, I use technical analysis to confirm market conditions are favorable or not favorable to my bias. I look for trends. I look for exhaustion in trends, right? I use price action and I use pivot points, both of which are forms of leading indicators. And then I use moving averages and oscillators and other things too, which are sometimes helpful as lagging indicators. But the bottom line is, I use technical analysis to decide, is this a good time and a good price to enter my trade? It doesn't tell me what to do. So on our charts, we have a price-time continuum. The only thing on your chart is price and time. So we use algorithms to try to paint some sort of logic inside of the chaos. That's what chaos theory is. Once we have that down, then it comes down to risk management. And risk management is a human function. It's not an algorithm. So you have to start with your mindset. And the number one goal as a trader should be capital preservation. If you're looking to get rich quick, buy your yellow Lamborghini so girls in bikinis will pay attention to you, you're absolutely, completely delusional and probably childish. Okay? Oops, was that too harsh? Capital preservation, and the reason for this is you're a business, right? I'm not a businessman. I'm a businessman. You are a business. Your product, money. Your service, money. Your inventory, money. Right? You got no money, you got no car, you got no woman, and there you are. I think that was Confucius. I think so. So anyways, you are a business. And when you don't have money, you are out of business as a currency trader, right? So you must protect your capital. Yeah, the first one was Jay-Z. Yeah, the second one is, what was that guy? What was his name? You want it, you got it. You want it, baby, you got it. Oh, bust a move. Just bust a move. You spot a fine woman sitting next. How does it go? You spot a fine woman sitting next. You find a. How does it go? You spot a fine woman sitting in a row. You spot a fine woman sitting next to you. Spot a fine woman sitting next to you. She's dressed in yellow. She says, hello, come on, come sit next to me, you fine fellow. You ran over there without a second to lose. So what comes next? Bust a move. Anyways. Oh, young MC, there you go. Yeah. She's dressed in yellow. She says, hello, come sit next to me, you fine fellow. You run over there without a second to lose. So what comes next, Jay? Bust a move. There we go. Well, that was a long time ago. That's the one where you says you're right, you got no money, you got no car, you got no woman, and there you are. I think that's the same song. Anyways, yeah, early 90s. I'm sorry. Sorry to go gangster on you like that. So capital preservation, you got no money, you're out. So everything you do in Forex should be protecting your capital. If you got a losing trade and your trade plan has failed, get out. Oh, right? But my winning percentage. No one gives a dang about your winning percentage. Okay? No one cares about your winning percentage. They care about how much money you lose. So you want to show people. Well, actually, you know what? Let's go back. Let's revisit the universal truth. What does everybody here know for a fact? One, if you're a bull, you buy low. If you're a bear, you sell high. Universal truth, fact, everybody here knows that. Ching, ring the bell. Universal truth number 2. The trend is your friend. Universal truth, ring the bell. Ding. Number 3, universal truth number 3. Keep your losses small, let your winners run. Everybody here knows that. Universal truth, ring the bell. Ding. Okay? So keeping your losers small is your form of capital preservation. If you have an emotional attachment to your winning percentage, most likely you're going to do the opposite. You're going to be afraid of taking profit early. No, sorry. You're going to, let me say it again. I got sidetracked. My something went beep. Anyways, let me go back. If you're focused on your winning percentage, then what you're paying yourself to do, what you're to achieve your accomplishment, let's do this, to get the accomplishment you're trying to perceive, which is a high winning percentage, you're going to be incentivized to get out of all your winning trades while they're still winning. Maybe it's 1 pip, maybe it's 100 pips. I don't know, but you're like, oh my God, I can't let this go negative, and I got a winner, and so you're kind of paying yourself to get out while it's a winner. Also, if you're worried about your winning percentage, you're like, I'm down 20 pips. I can't get out of this. It's going to come back up, and I'll get out at +1. But then it goes from -20 to -50. And you're like, well, I can't get out now. Plus we're on support. It's going to come back out, and I'll take my profit at +1. All of a sudden, you're at -400 pips, and you're like, well, I can't get out now. It's 400 pips in the hole. And you're incentivizing yourself. You're changing the rules of the game, right? So I've taken entire classes on game theory. You've changed the rules of the game to incentivize you to take big losses or risk big losses and get out of trades early. You're doing the opposite of capital preservation because you're trying to protect some ego trip on, you're like, I'm 99% winners. Yeah, but your losers are ginormous and you're 2 trades away from bankruptcy, right? So, universal truth, keep the losers small, but let your winners run. Okay. How many people in this room now have worked with me over the last 4 weeks and have at least 1 trade that's more than 500 pips? And if it's more than 500 pips, how many pips was it? Was it 552? Was it 758? Was it 1,321? How many people have had big trades with me over just the last 4 weeks? And of course, when you answer, I get to find out how big the lag is as well, which is kind of interesting. How many pips? Yeah, several of you guys, but how many? Well, Mr. High Volt, but you've had like, what, 20 trades that are probably close to that. How many pips, guys? Lugo, 2,000 pips. Daniel, 654. Ashish, 700. Now, here's the thing. Patrick's like, isn't 500 pips abnormal? Only if you don't let your winners run. Now, the speed in which you reached 5 or 6 or 700 pips, yeah, that's unusual, the velocity. But the fact that you're trading in the direction of a trend, no, not unusual at all. Okay. James, you're up 2,000 pips right now. Cool. Cool. Look at you. Look at this, guys. That's what, 24 people already. All right. I had an idea earlier in the week, and I haven't been able to get to the idea. Yeah, it's about a 10-second lag. But I said that I would offer a 76% discount to my training courses because you guys are locked up at home and you got nothing to do. You got all this time suddenly. And I was going to, let's say it's just complicated. It's not that easy just to do it. So I have a beta site for the new version of FX Bootcamp with all the training courses. It's like 35 to 40, maybe 45 hours. It says 35 hours, but I think it's closer to 45 hours worth of training videos. And I have a beta site to test out a new version, which is designed to be completely mobile friendly. Completely mobile friendly. So I made that. It has all the same videos. It's just not 100% perfect. It needs a bunch of tweaks, but all the videos are there and all the videos work. So I made the beta site 76% off if you guys are interested. Now, let me put this in context. The videos, people are paying $1,600 for 10 years. People have been paying that money. Then I created this beta site. It was a super secret site. I only sent it to a very small group and offered it for $777. I'm like, hey, it's not perfect, but it's 99% perfect. 95% perfect. But I need some beta testers, so I offered a super discount. So this is like half of that. So if anyone is interested in learning how to trade like these guys, I created the site and made it 76% off. So, and I'm only doing it during the COVID-19 days. So, moderator, can you post this for me? This is only because of the COVID-19. The site is 95% perfect, but it's 76% off. It's less than $400, guys. And I'm only doing it because you guys are locked up at home. You have the time to review all these videos over and over and over again. And there's no way you're going to see this ever again. Absolutely no way. Okay. I've also, in my trading group, like tripled the amount of time I meet with people live and didn't change the price. So anyways, there you go. So capital preservation, universal truth. Keep your winners, let your winners run, keep your losers small. Moderator, can you post that for me? Uh-oh. Moderator started the tequila early, huh? Yeah, I thought about it, but it just did. I just didn't do it. No, moderator. No, not that one, moderator. That's dead. No, not that one. No, don't send people that one. No. Delete that other one if you could. All right. So now capital acquisition has to do with trade planning. Okay. What do you mean, Mike, buy it again? If you already have it, why would you buy it again? Thank you, moderator. Yeah, moderator, best moderator in the world, I'm telling you. All right. Now, capital acquisition has to do with trade planning, okay? And this idea of acquisition is as your winners are running, you should reduce your risk, okay? And when you're sort of in between, like you're halfway, no, Moderator, moderator. What are you doing, moderator? No. Yeah, no, it's funny. No, this link I keep posting that you keep blocking. That one. That one's nice though. Trader's Way will like that. But that's not, no, that one. It's the one that YouTube is blocking. Yeah. The one that starts https:// FX Bootcamp. No, she's doing fine. Although, yeah, Trader's Way is great. It's all right. Trader, she's probably got like 3 things that she's moderating all at the same time. Yeah, no, it's all right. I'll keep posting it. She's like, oh, if you only knew my world, Wayne. Yeah, she like probably like moderating 6 things. Anyways, so capital acquisition is a risk management issue. When you take the trade, you must ensure there's enough reward for the amount of risk you're taking. We like to look at 3-to-1, 4-to-1, 5-to-1. Okay? So like one of the things we talk about in the day trading group is a 33.99, but also a 55.99 is acceptable. But the idea is if you take your trades, right, there should be enough reward. And then once you're in the trade and you're letting it run, you reduce the risk and at some point lock in reward. Okay, so like if you're going for a 300 pip trade, which by the way, we set up all the time, absolutely standard operating procedure. If you're doing a 300 pip trade plan, along the way, when you're up 150, 200 pips, you lock in some sort of profit. Okay, your minimal acceptable performance. Yeah, moderator, come on, moderator. There's the link again. Come on. Third. Oh, what just happened there? Whoa, what? There we go, that was weird. Capital appreciation. This is the idea of truly letting those winners run. What? Let me try. That's interesting. And you won't even let you cut and paste. That's interesting. All right. Hang on. Hang on. Let me give you a different link to the homepage. I just don't remember what it is. I think it's FX Bootcamp.com. Hang on. I think it's /COVID-19. Let's try that one. Okay. And it goes to here. I think that'll do it. Try this one. Okay. All right. So anyways, let's move on with it. Hopefully the link, I don't know why you would be blocked on a link, but anyways. So this idea is you have to let it run. So let's say you lock in 50 pips profit. Now when your worst case scenario is you hit your profit, you let your winners run. And you let it go for the aggressive target. Instead of going for the day trade, go for the weekly target, or maybe go for the monthly target. But be in trades a lot longer than you probably are now. How many people, right? Okay, how many people here, yeah, my beard is I'm not used to it. How many people here saw me in my trade that I was in for 10 months? How many people saw me in a trade for 10 full months? Yeah, 10 months. I made 1,000% return on investment. 10 months I let that sucker run. Okay, and that's the, right? That's the whole point. I'm trying to teach you that your trades, if you plan your trades in advance based on technical or fundamental analysis, you will likely do better. But you'll never know if you don't let the winners run. You know what, moderator? I'll just email you the link. Maybe that'll work. Cool. Emailed. Yeah, so imagine that, guys. Letting it run. So one of the first things I'm going to teach you is obviously how to do technical and fundamental analysis so you even get it. Because if you don't get it, there's no way you're going to trade it. Then the next thing is how to get really good at planning trades, combining your technical and fundamental analysis, right? And then learning to be confident in trusting your plan. By the way, the technical analysis is not that complicated. Adinda, no. The link you're sending, no. It's interesting that what's happening for you, that you're not even getting the link. So when things get blocked for me when I'm doing YouTube stuff, I can actually see what was posted, but it looks like you can't even see what's being posted. So anyways, I emailed it to you. So yeah, it's interesting that you're blocked. It's interesting. Yeah, oh, no apologies needed. It's just this is what happens, especially when you do something live, right? All right. So anyways, so the technical analysis is actually pretty easy. It's learning how to trust your analysis that's probably more difficult, right? I saw your email, Adinda. No, that's not the right one. The one I sent you is the right one. Yeah, well, they're both ClickFunnels ones, but it's the one that says fxbootcamp.com.clickfunnels, right? fxbootcamp.clickfunnels.com/homepage. It's my test site for now. So once we get this all perfectly cleaned up, that will become the new site and the price goes way back up. Cool. Yeah, 3 minutes left. Okay. So remember, it's not going to be as bad as some people or most people are worried. Oh, my volume is normal, so I don't know why it's broadcasting lower. So remember, if you are nervous on NFP, don't worry about it. Pick up the trend on Monday. What's the big deal? This is just a high volatility event-driven strategy, aka news scalp. It's not a big deal, guys. Okay. Remember, next non-farm payrolls will be a much bigger deal. Okay. Moderator, you still can't. That link won't post, huh? There's such a different. fxbootcamp.clickfunnels.com/homepage. HH, videos and live groups are two different things.
Welcome to Bloomberg Daybreak. We're just about a few seconds away from the latest read on U.S. jobs. In the markets, it's a little bit of a de-risking when it comes to the equity market.
Bloomberg.com.
Into treasuries, though, crude able to hold on to some of their gains. But you're looking at the currency market, also kind of seeing some action there with the dollar.
701.
10 space is the euro and the cable rate weaker after that terrible composite PMI from both areas.
701. 701. Average hourly, these things are typically, well, that's interesting. That's a pretty big drop in labor force participation. Underemployment, yeah, 4.4. Okay, yep. Very cool. Thank you, FX Street. Let's go first with here. Okay. So what do we know? Let me get my drawing tool here. What do we know? Let's see. I posted the link on the chat. I don't see it. No, I don't see it. No, it didn't come up. Okay. Okay, where did my drawing tool go? All right, so here we go. What do we know? What do we know? All right, this is what we know. There's the beginning of a downtrend. By the way, we met live Sunday evening. Sunday at 6 p.m. New York time. We met as a live trading group right here and we said down. Just to be clear. I don't see the link. There's no link. I don't see there's no post. I put again the link, but there's no post. There isn't one. Now you're being blocked. Strangest thing ever. So anyways, our trade plan for the week, down, 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 up, sell, 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 down, down, down. Guess what's going to happen probably next week? Can you figure it out? Up, sell, down, 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 up, sell, down, 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 down. Perhaps something like that, right? Yeah, Mike, but that's funny that even the moderator now is being blocked. Who's got the power, huh? Even the moderators be blocked. Hey, it happens. Well, that's really too bad. What can I say? What can I do? Yeah. Yeah. Of course, you're supposed to be able to post a link. It's funny, but yeah, it doesn't pop up. But you're able to post the other ones. It's just like crazy. It doesn't make any sense. How about this? Why don't you remove the HTTPS? Just literally put in this part. Where's that? It's so funny. Amazing, actually. So just put in this part. Right? There we go. Just put in this part, fxbootcamp.com.clickfunnels.com, or sorry, fxbootcamp.clickfunnels.com/homepage. Don't put in the HTTPS. No, nope, cannot see it. You're being blocked. Yeah. So I'll show you, right? So you get here, you click to begin. And you sign up here, you go to step 2, and you enter in this code. You see how it's 1,618? Now you type in COVID 19. Watch this. Ready? Boom. 76.4%. It goes from $1,600 to less than $400. Trust me, I'm not going to leave that around very often, but I know you guys are stuck at home. Okay? And you got the time. So this is my way of contribution. Also, like I said, my live trading groups, I'm meeting with them like 400% more often just to make sure everyone is staying calm and focused during these crazy days. Okay? So anyway, so the euro dollar here is doing what we've expected it to do all week. Now you can change this up and take a look at it on a daily trading basis. So now you got to go on to like a 5-minute chart. Okay? And this is what we've been doing all week as a live trading group. There's the sell, down, 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 up, 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 sell. That's our trading week. Does it include live groups? Does video training courses include live groups? No, that would be live groups. But actually, when you sign up, I give you $400 off of that. So there's actually quite a bit of ridiculous savings, but I don't mean to over promote. Okay? What does the moving average actually do for your trading? Oh, really? That's interesting. Reb, I would expect you'd know that one. That's all right. Let's go into it. Okay. When a crossover occurs, like this 2155 cross, in this case, the 21 EMA is the orange line, the blue line is the 55. That's when the market technically becomes bearish. Brad Hall says this is a better deal than the Black Friday deal. It's half price. It's half of the Black Friday deal. I took the best deal I ever offered and cut that in half because of COVID-19. I'm trying to do this because you guys are stuck at home freaking out thinking it's the end of the world. Meanwhile, you should be using this time to sharpen your saw. Okay? You should be focusing, not freaking. So anyways, that's what this means, guys. Now, the green line here, this is a 200 EMA. That's the fair market value. Take a screenshot. All right. Well, let's do it this way, guys. Take a screenshot. That one's probably too complicated to type in, but that one you can do. Right there. fxbootcamp.clickfunnels.com. ClickFunnels is my testing server. Homepage. This will become the new FX Bootcamp. The old FX Bootcamp will go away and the price will go up a lot. Take a screenshot, guys. Okay, cool. Yes. Right? Moving averages, that's so 1980s. It's not the prime focus. So I'll show you what I need to trade. Here's what you have to have. You can use moving averages, it's fine. But this is what I need. Okay, this is what I need. And in fact, I don't even need candles really. So I can change that to, where's it, line. Okay, this is what I need to trade. I don't need moving averages. I don't need oscillators, all that kind of stuff. So I'm a macroeconomic trend trader. So I understand the macros, the macroeconomic data, and I understand trends. Now, inside of what I use now are two leading indicators. Okay, leading indicators. And my opinion is, if you don't understand leading indicators, you will not be able to trade successfully over long periods of time. Okay? So the first part of it is, number one, price action. And number two, you're going to learn how to use pivot points. Okay? Now, both of these are leading indicators because they help you predict the future. They, like, for example, this line in the sand here, we know for a fact before it hits that that's where bulls are going to buy. We knew that before, not after. It's not like looking backwards and say, oh, well, this is important. We know before it happens that that's where the bulls live. Okay? We also know this is where the bears sell. Okay? Before it happens. Okay? So they're leading indicators. Okay? They're leading indicators. And so the price action is obviously measuring, is a leading indicator of price. Really what it is support and resistance of price. Okay? Price-based support and resistance. Okay? So you get things like lower low, lower high, right? lower low. So using price action now, you drag this old low, drag it across, and you got your new sell zone. Before it happens, then you get the up, 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 and then you get the down, down, down. Same thing here. Price action, double bottom, higher high, right? Use price now to drag this over. There's the new buy zone, okay? Up, 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 new higher high. Drag this across, new buy zone. Up, 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 so to speak. You keep doing that over and over and over again. Okay, now pivot points are leading indicators, but they're not measuring price per se. What they're doing is they're looking at the previous period and measuring support and resistance. And they do it by looking at the lowest low, the highest high, and in this case, the highest high is also the close. So it's measuring high plus low plus close divided by, well, I guess I can do it this way. Divided by 3. And this close is important because if I did high plus low divided by 2, you get the average. You get the mean. We're not necessarily interested in the average. Okay. Okay. This close is important because what the math is doing is adding sentiment. Did the last period end bullishly, bearishly, or neutral? Because this will affect the near future. So it's a weighted average. Okay? Is anyone here a statistics major, a statistics junkie? Has anyone here completed advanced statistical studies at university? Because if so, you'll understand the rest of the math for pivot points are based on a form of standard deviation. Okay? So a standard deviation study includes things like taking a scatter plot of all the prices over this period of time. Okay? And using, like, let's say y equals mx plus b. Okay? M being the slope, so now M equals rise over run, which is how much does price go up over time, okay, or down over time, and you figure out that, okay, B being the intercept, okay, and you take all of this, and the first thing you do is you calculate the mean, and then the slope of the mean, and then you can measure how far from the mean price tends to move above and below the mean. Oh, thank you, moderator. It's in the video description? That's really cool. Thank you. I'm telling you. I appreciate that. Moderators don't have to go to that effort. I appreciate that. That's above and beyond duty. Above and beyond the call of duty. 3 stars. Thank you, moderator. Okay, so now you got your mean, and then the slope of a mean, and then the standard deviation from the mean. And what you do is you get something like this in pivot points. So if we added the high and the low and divided by 2, you can eyeball this. The pivot point would be here. Correct? But what we're doing now is we're taking a weighted mean and we're saying it's a little more bullish than bearish. And then you take the standard deviation of the mean and say, well, here's one standard deviation. Here's another one standard deviation down, one standard deviation up, and you get the R1 and the S1 pivots. Okay, now these are M's and those are midpoints. So now you just calculate one standard deviation below the mean and then divide that by 2 and you get M2. You take one positive standard deviation above the mean, divide that by 2 and you get the M3. You see the math? And then you'll ask yourself, well, what about the 2 standard deviations? So now you do your standard deviation. There's your mean, your weighted mean, and then you do 1 standard deviation, 2 standard deviations, 1 standard deviation, 2 standard deviations from the mean, throwing down this distance, cut that in half, and you get M1, cut this distance in half, you get M2, cut this distance in half, you get M3, cut this distance in half, and you get M4, and you just invented pivot points, where simply are a weighted, right, standard deviation from a weighted mean. Long story short, they're leading indicators because I'm looking here and I'm looking here and we're doing these calculations and we know where bulls would buy and where bears would sell. Okay? And that's the math of a pivot point. Using a weighted mean and then standard deviation from the mean, second standard deviation from the means, and then the midpoints between the standard deviations. Nice! Huh? Right? Boom. What do you think? Cool stuff, huh? Cool beans. All right, so let's do yens. Let's do all yen pairs. Dennis, this kind of looks like an Andrews pitchfork, where they're all basically based on each other. I'd say if you go look through all the tools that are available, right? These are all, there are probably only like maybe 8 tools, right? 8 different things, and you got 1,000 tools that do different versions of the 8 things. So if you understand the 8 things, you don't need 1,000 different tools. So my point is, I think you should keep it as simple as possible. But at the same time, you should also understand what your tools are doing. Rab, right? I know, right? You got to keep it simple, guys. You got to keep it simple. So, for example, let's go back. Like I said, here's what we did on Sunday night. I got to zoom in here, right? Friday, Thursday, Wednesday, Tuesday. Okay. So, I think this is where we were. And this is how simple it is. 6 p.m. Sunday, a few dozen people get together in my live swing trading group. And we conclude bearish for the entire week. And we estimate roughly 500 pips potential. Sounds amazing, right? No, we're just doing our job. And from that, we have a trade plan. In fact, multiple trade plans, because we also met as a day trading group. So we meet for day trading and swing trading in the live group. So we have this down, 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 down. Actually, let me fatten this sucker up here. We have a down, 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 up, up, sell. 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 Okay? And now we don't know what's going to happen on Monday using this day trading plan until we get through today. Okay? That's right. Actually, we didn't say bearish. We said risk off. Absolutely correct. And then from risk off, as traders, we know if we're risk off. So let me correct this. You're right. We actually didn't say bearish. We said risk off. So we said we are going to buy yen, buy dollar. And then we looked at Swiss franc and we were kind of like, we want to buy it, but it didn't look that good this week, which actually surprised me quite a bit. Right? So that was the issue. Mohit says, how do you join the swing trading group? Check this out. So if you're able to get to here and you pay the $400, less than $400 to get the $2,000 worth of courses, the next thing it's going to do is make you an offer to join the live group and give you a $400 discount. So essentially, if you join the swing trading group, you get all the videos for free. So, I mean, it's stupid. Okay? It's stupid. It's such a good deal. It's stupid. If you're not going to do it, you don't want it or you don't have any money. And I can't change either of those things, right? So anyways, so now what we need to do is now we need to think about next week. So before you can think about next week, you have to visit where you are this month. So let's take a look at this month. And here we are, another monthly trade plan, or pivots, I should say. So how did we get here? Well, let's do the math. Okay. I need one more click. No, the wrong click. Come on. What's it doing? Back. Oh, duh, I got it backwards. All right, one more click. Okay. So do the math. Here's the low. Here's the high. And here's the close. Okay? If it was average, you would look here to here and it'd be a little higher. So here's where the average is, but here's where the weighted average is. The high plus low plus close divided by 3. And what it's telling you is the market is more bearish than bullish because the old central pivot was here and now the weighted average is here. Okay? And then to continue with the math, it says if you look at the average of all of these prices, and then you look at how far price tends to move away from the average, okay, and again, rise over run is the slope, which is the M of the formula, y equals mx plus b, okay, and b is the intercept, okay. So there's your slope, rise over run equals m. Here, there's your intercept, which is b. So anyways, you take all of that and you say, well, when price moves to the down and away from the average, it tends to go this far. And then you measure that. And then if price goes above the average, it tends to go this far above. Okay. And then you create your standard deviation, which is, what is it? The square root of, I forget what it is now. But anyways, so you get all of that, and long story short, it says this. Oops, it says all of this. And then we have this on our charts already, but it's important to me that you know what these charts are doing so you can actually make decisions. So it says here's one standard deviation, and here's one standard deviation based on what happened last month when price goes too low or when price goes too high, okay? Neat, right? So, if you were a bear, what are you supposed to do? Well, bears know they want to sell high, so you need to create a sell zone. Okay? And if you're a bear, you want to sell in that zone. And the zone is here. Okay? Now imagine on the first hour of the first day of the new month. Can you imagine that? This is what we said as a group. Sell right here. If you were a bear and you're here and we were there as a live group, there's your sell based on all that lovely math we just did. And your target is somewhere just below 115, maybe 114. So here's the entry and here's the target. Okay? That's a monthly swing trade. Okay? And based on that, the potential for your trade here is you're selling it at 1850 and you're going for about not quite 400 pips. We'll say somewhere between 300 and 350. We'll say 300 pips. Okay? 300 pip potential. So that's where you're going. That's like printing out a map. Okay? Picari, do you think I'm that kind of person? Honestly, I come across that way. I'm going to say screw you. You just became a customer, so screw you. I don't think so. Wayne, you're not supposed to touch your face that much. I'm not used to this beard. Hang on. I got my spray. I got hand sanitizer. There we go. Right. But thank you for reminding me, guys. All right. So this is where we're going. We have a roadmap, right? I'm teaching you how to plan, by the way. I hope you appreciate that. So we got the roadmap. You know where you're going. And by the way, when you're with the live group, you certainly could have sold that. That was the whole point. Okay. All right. So it looks like it works. A couple of people have joined already, so it seems to be working. So that's good news. Okay. Right on. So with that in place, now let's do this. My pleasure, Sophie. Now you start folding in smaller time frame trades. Ones that are likely not worth quite 300, right? So let's do it this way. Looks like the same chart, right? No, it's not the same chart. It's the same analysis. It's the same algorithm doing the math. What is the mean? What is the slope of the mean? What is the intercept of the mean? What is the standard deviation from the mean? And therefore, what is the weighted mean in this period? What is the standard deviation above and below that mean? And then what are the midpoints between the one standard deviation and two standard deviations below the mean? And what is the midpoint between one standard deviation and two standard deviations above the mean? And it plots these little colors. Okay? And check this out. Here's where it all started. This is where we felt this is where we knew to become bears. And then we met as a group Sunday evening, 6 p.m., and we got this. And that's the same thing I just showed you. So up here, we had this giant sell zone for the month, but right here we have a giant sell zone for the week. And so here's our weekly plan. You want to sell at the sell zone. You're already a bear because we're already selling off the bear sell zone. So you got one long trade and you're going for what, 350 pips on this one? So now weekly, we analyze these market conditions and we want to get short at 120. Okay, just below 120. And based on that, we're targeting this green zone, by the way. So sell it, and we're on our way to about, what do you call this? Not quite 116, 116 and a half. Okay. So actually, look, I messed this one up. This is 121 going for 115. Oh, sorry, 121, 115, right? So this is more like 650. This is the one for 350. And notice that we're done for the week. Do you see that? And right now, what I'm probably going to do next week is I'm going to sell it off of 118 and drop it like it's hot. Okay. Well, to our wonderful heckler that says all of this is nonsense, all right, cool. I'm glad you're able to share your opinion. I guess it's all hopeless. It's all random. It's all random, dude. It's all hopeless. All right. So anyways, so now we got that. Where did I just go? Man, that's where hecklers always get me off track. All right. So now you got to drop in yet another smaller time frame, and you can set up day trades. Okay. And let's take a look at the sell zone on a daily basis. Is this confusing? Yeah, there's way too many lines. A lot of you guys get confused. So what I did is I created a new tool, and I now look at it this way. I say, okay, I want to day trade this, and I'm a bear. You see this? Day trading bearish. So I say, okay, algorithms, do your work, but tell me not all the lines, because it's too confusing. I get lost in the lines. Tell me exactly what I want to know. I want to know where I want to sell and where I want to take profit. And the algorithms do this. Okay. And it says, okay, Wayne, you should sell here, and then sell here, and then sell here, and then sell here, and then sell here. Okay. Now the targets, okay, the targets are like, this is where, right? Here's your target for day 1. Here's your target for day 2. Here's your target for day 3. And here's your target for today is a little lower. And we haven't quite hit that, but influenced by news, right? So day 1 target is you sold here and your target was this price. Day 2, you sold here, your target was this price. You can't see it, it's basically the same price. Day 3, you sold here, but this was your target. Day 4, you sold and your target is just below, probably here. And then if you sold this morning, your target is lower than that. So this one you hit, this one you hit, this one you've now hit because of this, and then you might have one open and or 2 open or none. Okay. Right on, Joe. Joe says, I want to say thanks for what you do every day has helped me figure out how to get out of your own way. Get out of your own way. Get out of your way. There's a song in there, something, right? Somewhere. For some reason, it reminds me of Bill Clinton. I don't know why. Preach to teach, because some of you never had this. Your enemy could be your friend or guardian. I'm not a hooligan. I rock the party and clear all the madness. I'm not a racist. I preach to teach, because some of you never had this. Yeah. Okay. You got banned, Mr. Highvolt? Oh, Dwayne? Interesting. I'll have to check that out. Not in the $5 package. No, Molly. You get the basic one that I've been using for 20 years, but not the new one I just created like a month ago. You get you can build this, for example. This is, I think, the most important template I have. And you get this, yes. Okay. Okay. All right. What should we do now? Do you want to do some dollar pairs? Well, the new template, like the one I was showing you, like this one, is actually in. It's either in or will be in later today. The video training courses I just promoted. So if you like this one, for example, see the awesome part about this template, guys, is when you install the custom indicator, my bias pivots indicator, it forces you to tell the indicator whether you're a bull or a bear. You have to make the decision. And psychologically, what this is doing is telling you that indicators don't make decisions for you. You understand that? That if you're looking at your indicators to try to figure out what's happening, you're doing the wrong thing. Okay? So if you look at this and you're like, hey, I want to be a bull on USD CAD. You believe oil is going to go down. You believe we're in a risk-off moment. Wow, that was loud. Then you're okay. So you want to be a bull. So you have to establish this, set it up, and say, I'm in bullish mode. Tell me what to do. And there you go. And these are your opportunities, right? And then on a different pair, you might say, no. I don't want to be a bull on this one. I want to be a bear on this one. Okay? And it will change things for you. It's doing the same math, but it's just changing what information matters. And you can see this has actually been neutral for several days. Right? No. Your credentials for your swing trading membership only works for your swing trading membership. Oil's way up today. Yes. And actually, a shame. Let me show you what I accidentally did today. I was preparing for this webinar and I accidentally locked out of my trade for $1,000. I misclicked. I went to close the window and I was busy doing 9 things. I'm supposed to close this window this way on this click, but I was distracted. And what I did is I was in my open trades and I clicked to the right and I just saw the X and I clicked it and I closed my open position. I made $1,000 by mistake. I'm like, oh no! I got out of my oil trade. Son of a, oh, it was such a bad mistake. Oh my gosh. So, yeah. And you can see already I've left more. Oh my God. Oh my God. So anyways, I bought oil low. Son of it. I made a mistake. So anyways, I accidentally got out of a beautiful trade. So we did that one as a group, and I have to apologize to the group. I'm sorry. See, it's one challenge being a coach. Like, my trading computer's behind me, right? So like, this is my coaching platform. And I'm often distracted doing things like setting up YouTube and trying to figure out why the things are working and why is this happening. And I'm explaining things and I can get sidetracked pretty easy. And I was distracted and I misclicked and I closed the trade. I wanted to make like $30,000 on that trade. But I made 1,000. I'm sorry. Sucked. It sucked. So anyways. Oh, top touching. Sorry. You guys also have to, I never leave the house. Like, I almost went to the liquor store last night. But yeah, so I don't meet people and stuff. And even then I don't tend to get sick, but do I consider COT? Yeah, absolutely. Yeah, Craig, you nailed it. And good for you, man. I'm supposed to be on it too. And I guess I'll have to buy a dip or something. So that's cool. Good job, man. I guess what I should do is just shave my beard, but this is my COVID-19 beard. So I'm in, what, week 2.5 or something? But okay. So anyways, bummer. I bought this. I asked the group, actually. I said, what are the chances oil goes to 0? Everybody says none. And I said, I'm pretty sure the break-even point for Saudi Arabia is about $15. At that point, they're losing. But there's no need for oil to go to 15 because the break-even point for pretty much every other oil producer in the world is above 20 for sure, right? So I said, if Saudi Arabia is trying to push Russia around and the rest of OPEC around and trying to bankrupt frackers in the United States, well, frackers need 40. Like, there's no need to go from 20 to 15 because 20 is enough to like kill everybody. And that's the whole point of a price war. So I said, so even $15 a barrel is very unlikely. There's no reason for Saudi Arabia to go even lower because they're only hurting themselves. So we bought oil low, right? We bought oil low. And I said, look, if I put one standard lot on the trade and oil goes from $25 a barrel to zero, I will lose $25,000 because it was one standard contract. But I had like $36,000 in the account, whatever it was, right? So I'm like, I got $35,000 in the account. If it goes to zero, I will lose $25,000. But we all agree that it's not likely to go to zero. Maybe not even 15. So I'm like, I'm risking 10,000 bucks, really, and probably not even that. I'm probably only risking 5,000 bucks because at some point it just cannot go lower. So I'm like, what should I do? Should I buy it? And everyone's like, yeah, you should buy it. So I bought it. So anyways, that was the logic, right? You know what? It's just occurred to me when I sprayed hand sanitizer on my hands, some of it dropped into my coffee. Let me reload. Let's take a 1-minute break, and then I'll open it up to the floor for questions. If you want me to cover a particular currency pair or Bitcoin or something like that, or gold, I'm happy to do that. If you want me to talk about a particular topic, I'm happy to do that. So let's take a 1-minute break because we're about 2 hours into this. Let's take a 1-minute break. We'll come back. And then for the next hour, I will talk about what you want to hear. Is that fair? And hang on. And then where's the... And I'll put this up here as a reminder if you guys want to join. Okay. There you go. 76% off. All right, back in 1 minute. I preach to teach because some of you never had this. All right. Do you know if Wayne's site accepts debit cards? If it's got a Visa on it, Daniel. All right. So if you want to know how to scalp, I can teach you how to scalp. If you want to know how to swing, I can teach you how to swing. If you need to know how to carry, I can teach you how to carry. If you need to learn how to portfolio trade, I can teach you portfolio trade. If you want central banking and sort of news related help, I can help you with that. If you need to understand central banking policy or monetary theory, I have a Harvard degree in this stuff. I can teach you how to do that. So there's a lot here. Did I say scalping? Okay, I got you that. Multiple time frames, chaos theory, fractal geometry. You want to talk about my days at NASA? I can do that. If you want to talk about my days with George Soros, I could do that. If you want me to talk about my days as a venture capitalist, I can do that. How to raise money, how to launch a fund, how to be regulated. There's a lot I can cover in the next hour. Let's do a scalp. I don't think these are likely to be good times for scalping, but let's find a pair. Let's do euro dollar, for example. Well, John Mark says, what 3 indicators would you teach someone new to Forex? Well, earlier in the webinar, I explained you need to know price action and pivot points. Those are the 2. Let's just focus on those 2. If you don't know how to identify support and resistance, whether it's support and resistance of price or support and resistance of market, if you can't figure out support and resistance, you will fail. Okay? My days with George Soros. I sat on a board of directors in New York City that included like the vice president of General Electric, the vice president of Arthur Andersen. Shows you that this was in the 90s. So now it'd be Accenture. There was a representative from the United Nations, and I was elected to this board in 1995. And George Soros, head of the Quantum Fund, was on that board with me. I have the annual report somewhere. I found it just recently. And so that was like a million years ago. I wish he had come over to me and said, son, let me teach you about this Forex thing. Because what I did is after my days on the board, I'm an entrepreneur, right? So I went on and started it was a media company back when online media was new. And anyway, so I started this thing. It was really cool. Worked for a few years. Was very successful, and then it hit the dot-com bomb days. And so very quickly, my company went out of business. All my customers stopped paying me. So I had to lay everybody off. I had this beautiful office. It was about, I think it was 5,000 square feet. This was really cool because it had very, very, very high ceilings, and all the walls were white marker board. So we used to have these meetings where if you had an idea and you were just talking on the way to the break room or something, you bump into someone and you're talking about your ideas, we had markers all over the floors, hundreds and hundreds of markers everywhere, just laying on the floor. And you just grab a marker off the floor and start writing on the wall, and you start flowing your ideas and stuff. Like, it was really cool. I had a break room, I had bathrooms, the office had showers, it was fantastic. I had this closet full of all the office supplies in the world. I was so happy, man, living the dot-com dream, and then it all went away. So what I did is I laid everybody off, and I said, while you walk out the front door, take a computer, take a monitor, take anything you want with you, just take it. I want this to end as good as we possibly can. And everyone knew the situation. So everyone took home machines and stuff. And then I had something like 50 chairs left over. So I contacted a nonprofit that was desperate for these things. And I said, I have 50 chairs. 50 office chairs. Beautiful, right? Desk chairs. And they're like, well, how much do you want for them? I'm like, are you a nonprofit? Yeah. Do you have like the tax write-off for them? Yeah. I'll give them to you. All of them. Just come get them. So I gave away everything I couldn't sell to charity. And then I locked the front door and I slid the keys under the door and walked away broke. Welcome to the dot-com days. Well, I found another company that was about to go bankrupt, couldn't raise any money because they were a dot-com, and it was in the middle of this dot-com bomb. They had a great product, they had a great service, no paying customers, and no way to raise money. They were working out of a 2-bedroom apartment in the Russian district of San Francisco, and they were about to go bankrupt. So I walked in and I said, you know what? I'll work for free, but as money comes in the door, some of it goes in my pocket, and as money comes in the door, I earn shares in your company. I want to own it. About a year and a half later, they're making $1 million a month cash rolling in the door. No advertising, no marketing, no investors. Thank you very much. So after that, we grew it into 3 offices, about 400 employees. They're still a market leader in their business. They're still in business after 20 years. I found them bankrupt working out of a bedroom in an apartment building that didn't even have lights on in the hallway because it was so cheap. Stains on the wall. Now they're a huge success. So after that, I became a venture capitalist and started putting money into other companies. And my job all day was to listen to 5 different elevator pitches, go through patents, interview entrepreneurs, and if they had interesting ideas, if they had interesting products and patents, I'd fly them into my office and they would bring their prototypes, and I'd bring in engineers, and I had a team that did market research, and we had another team that did engineering backgrounds and all this kind of stuff. And grew that company into about 400 people. I personally made over 100 investments, and my team made probably 500 investments. And while I was doing this, I started reading about this thing called Forex. And it said it was $2 trillion a day. And I'm like, $2 trillion a day? Oh my God, I'm pissing around with this $100 million a year opportunity when this is making $2 trillion a day. I'm like, oh my God. So I'm like, I should probably quit. And I started trading Forex on the side, waking up early in the morning and trading late at night and still going to the office. And I'm about to quit. And then they said, hey, you know what? We want to promote you to vice president of the firm and create a whole new division. I'm like, really? So they moved me from a window office looking towards downtown to a window office looking over the San Francisco Bay. And I'm like, this is great. And the CEO loves me. My old boss hated me, but the CEO loved me and everything was good. I just couldn't get over Forex. So I quit because I was doing too well in Forex to keep my stupid venture capitalist job. And that's been pretty close to 20 years now. Interesting, huh? So I jump ship. I start my Forex trading business out of my house. And about 6 months into it, I'm like, holy crap, I made a mistake. I analyzed all the risks except being alone all night long. Because in California, you trade from 10 o'clock at night to 10 o'clock in the morning. And I didn't calculate that as a risk. And the isolation began to kill me. And I started making very bad mistakes out of loneliness and boredom and all this kind of stuff. So I had a business planning retreat with myself, which is probably the best weekend I've ever had professionally. I had a business planning retreat with myself. And one of the things I said is I need to surround myself with other like-minded people because that's how I always found success. And from that was the birth of FX Bootcamp. Yeah. So again, welcome to the 14th year anniversary of just this one webinar, Trade Non-Farm Payrolls Live, that I've been doing with FX Street. Happy anniversary, guys. So this must have been more like 18 years ago that I had this business planning retreat. Okay. So thank you for sharing this journey with me. So anyways, we had a question about scalping. the first thing I need to scalp is something to scalp off of. Now, there are different types of scalping methodologies. Most of you are probably thinking of a high volatility event-driven strategy. What is an event-driven strategy, guys? Okay. An event-driven strategy is you know when it's going to happen. You know it's on the calendar. It's an event. Okay. So I don't prefer a high volatility event driven strategy. Now, 14 years ago, when I did Non-Farm Payrolls live, when the number came out, the euro dollar would jump about 350 pips in 1 second. Now, we just lost 700,000 jobs and nothing happened. This is why I don't like doing it anymore. This is why I should caution you, if you're being taught how to scalp, I think what's happened is your guru read somebody's book from 10 years ago and started a scalping group. But compared to like 10 years ago and 20 years ago, that's a dead methodology. You're buying into a dream and it's a fool's errand. You just saw a crazy, ridiculous non-farm payrolls, and there's nothing more important than non-farm payrolls, and nothing happened. Okay? Nothing happened. So you got to be careful. But I scalp into my trades. It's just, if you're trading to make 20 pips every time you trade, you're trying to make 20 pips. It's peanuts, guys. Peanuts. You don't get it. You don't get how to make money in Forex. You're leaving, most of these trades are so obviously 100 to 200 to 300 to 400, 500. It's so silly to even try, I want to pick up 20 pips. Really? And by the way, oh man, I want to scratch my face. It's crazy. How do you get rich? How about this? Try to explain this to me. How do you get rich? Whatever form of rich you have in your mind, how do you get rich scalping? How do you do it? The only way to do it is to jack up your leverage, to have huge lot sizes, because you're not making any pips. Let's go back to what we started with today. I asked you, what are the universal truths that you know about trading? Buy low, sell high. The trend is your friend. Let your winners run. Well, by definition, you're not letting your winners run. And you might be completely ignoring the trend. But by definition, by scalping, you never, ever, ever let your winners run. But we know that that's a universal truth. It's a fool's errand. Now, should you know how to trade on a 1-minute chart and a 5-minute chart? Oh, faux show. But the only thing you do is scalp, it's not going to work. So here's what I would say to you if you are primarily a scalper or you believe that that is the way to your riches. Bust out a 3-year pro forma cash flow statement, day by day, week by week, month by month, year by year returns on average. Okay? Do the cash flow statement. And you will see that there's just no way. There's just no way. Because at best, you're doing a 1-to-1 risk reward ratio. At best. And you're going to do this 10 times a day, every single day, for the rest of your life? This is how you're going to make money. Really. Making short-term trades with high leverage very successfully, right? Return-wise, because you're one-to-one. Like, let's make this point. One-to-one means if half the time you're a failure, you make zero money. Okay? So let's say 75% of the time you're a winner and you make 18 pips. And 25% you're a loser and you lose 18 pips. Your pip number is so small, it's tiny. So how do you make real money? Big lot sizes. It's insane if you know anything about trading, anything about risk and reward, anything. Like, it doesn't make any sense. There's no logic to it. Right? It's mathematically a guaranteed failure strategy. Now, I don't mean you can't scalp. What I'm saying is you can't scalp as a primary trading strategy and expect to do it consistently every day, day after day, week after week, month after month, year after year, decade after decade, and make serious money. Okay? We know that for you to be that consistent and be that successful, you have to let your winners run. One of the reasons is the math. Let's talk about that. In day trading, one of the things we talk about is a 33.99 OCO. And I'm like, if you can't make 100 pips on your trade, you're not a very good trader. So we have to work on that. But do you understand, if you're wrong 66% of the time, you break even? You understand that? If you're right 50% of the time, or let's say wrong 50% of the time, you are profitable. Do you understand, like, this basic concept? Even if you're mediocre, you're profitable. If you suck, you don't lose money. And the other way to do it is you have to be hardcore. Do you know how difficult scalping is? You have to be at the right price at exactly the right time, down to the second. And if you're a couple minutes off, you gave up 50% of your reward, but you took 100% of the risk. Like, it's insanity to say you can do that every day for 20 years. And oh my God, the stress level? Holy smokes, guys. It just makes no logical sense. So we got to throw that out there. But you can scalp, and you should know how to scalp. It shouldn't be your primary thing, because if you actually do the math, it makes no sense as a primary strategy. Okay? Great. But I love scalping. I love it. I traded the 1-minute chart every single day for a year to find out what it's like. So I know from experience. So the first part is you find your trend and you find your bias. You understand that? On a 4-hour chart. With that, you can use different types of resistance. And we're only looking to sell because we're bears, and we only sell off resistance during rallies because we know we're bears. And what's the universal truth of a bear? They only sell high at resistance. Do you understand that? If you are a bear, you only sell high at resistance. So what does this tell us? We need high, first of all. So we need green candles to drive this up. As a bear looking to sell, we need green candles. This will blow people away once they figure out this truth. If you are a bear and you're selling red candles, you don't know how to trade. If you think this is a zero-sum game, you've read the wrong book, so to speak. You're in the wrong school of thought. You think like a scalper. You think short term. You think the wrong thing, or you are delusional. Forex is not necessarily a zero-sum game. It's a dance. It's collaborative. Bulls buy when bulls are supposed to buy, and bears need them to buy. And then bears sell where bears are supposed to sell, and bulls need them to sell. For example, if you just sold this all week, by the way, this was our trade plan, okay? Let's say this was our target. We decided to get out. If there's no bulls, no one's going to buy your trade, guys. You need a bull to come around and say, yeah, I'll take that risk. You're like, really? All right, cool. And you exit for profit. But it's not like you stole from the bears up here. You need a bull from up there, right? Now you need a bull to come along and buy from you. You need the bull. And what's your next trade plan? Well, we just talked about it. You want to be you're a bear. So you want to sell high at resistance. Well, how about let's sell 109 or a test of 1010. Plan A, plan B. Would you guys agree with that? If it rallies up to 109, would you sell it? Okay. What do you think, guys? If it went up here, would you sell it? Well, then you need bulls. So bulls will have their day in the sun, and it'll go up and up and up and up and up and up and up. They will then get punished, and this will come down. This is a delicate dance between bulls and bears. In this case, bears are leading this dance. And later on a different song, later in the night, the bulls will lead the dance. So stop thinking so competitive. Okay? This is integrative. This is an integrative approach, not a distributive approach. Distributive means, in the English language, I get mine, you get yours, and my job is to get more, so I have to take more from you. And you will get less, and I will get more, and we'll just distribute. So how many pieces of pizza should I get? Are we going to split the pizza in half? Or 3/4? And this is mine, this is yours. I eat more because I took more from you. That's not actually how it works. Okay? It's not actually how it works. You can't think that way. You shouldn't think that way. And if you get these little subtle lessons, guys, your trading's going to improve. Okay? Because you can anticipate, a bull will anticipate bears selling here. So they'll exit for you, which is perfect because you're taking over their trades for them and they need you to. And then you'll take it down and you're like, yeah, I'm selling in a downtrend. So actually, the first part is you're probably going to want to sell off of this, and the second one would be this. So really, this is a whole zone. Your plan A and plan B is actually probably a little different. You probably look at it like this. So the point with the scalp is you need the up, and then you look to sell on a small time frame. And now you're going to scalp 100 pips. Forget your 18 pips. Forget your 22 pips. Forget your 50 pips. Forget it. It's not worth the risk. You're worth more than that, guys. If you have a plan, if you plan, you are worth more. Now listen to this. If you don't plan, you are worth less. Do you want to be worthless? You like that play on words? If you plan, you're worth more. If you don't plan, you're worthless. But it's so true. So, you can use moving averages. No, somebody laughed at moving averages today. Well, apparently they don't understand how to use them. Oh, it's so 1980s. Oh, people didn't make money in 1980? But anyways, moving averages are a lagging indicator, but think of them this way. They're a dynamic level of support and resistance. Okay? What's important is support and resistance. Okay? So watch the moving averages here. This was bullish for, okay, up until about here. Now the moving averages, right, adjust, but check this out. Once this becomes bearish, check this out. Below the moving averages, up, 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 into the moving averages, sell. Down, 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 up, up, into the moving averages, sell. Down, 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 up, up, into the moving averages, sell. Down, 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 down. What, pray tell, do you think we're going to do in the near future? And this is specifically to the dude that logged in and laughed at moving averages. Look, you don't need moving averages. You can use fibs. If you don't like Fibonacci, you can use price action. If you don't like price action, you can use Elliott wave. If you don't like, dude, they're all the same. Okay? But nonetheless, up, 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 into the moving averages, sell. Thank you very much. Monday is now planned. Done. Okay? How many people have seen me plan a trade 1 week in advance? Where I can tell you 1 week from now, this is what we're going to do, and then we do it and it works. How many people have seen me do it 1 week in advance? 7 full days. Before it happens. 7 full days before it happens. How many people can confirm? And not just once, like 100 times. My point is you can plan these things, that they are plannable, and that if you're not planning, your trades are worth less, potentially worthless. Okay? Yeah, how many people have seen me plan a trade 1 month in advance? Or 2 months in advance? Or 3 months? Or 4 months? Or 5 months in advance? And have it work out? We're not talking about hours, right? My point is when you log in to your computer and you go, I wonder what's going to happen today. Oh, look, London is down. I guess I'll do a breakout. You're missing such a big picture. Now, trading in that time frame is also important. Okay? Right? Market opens, for example, is something we teach at live.fxbootcamp.com. You need to know how the mechanics of a market works and what price action is telling you. But you can also know what's going to happen next week or next month and plan for it. So here's my point. If you're currently logging in to your charts and you don't know what to do, you should stop trading. You understand that? There's no little trick. There's no little indicator to tell you what to do. Because by the time it's happened, it's already happened. It's already dead. If I can plan tomorrow, today, and you show up tomorrow and you don't know what you're doing, I'm going to win. It will become zero-sum game because you've added zero. You don't even have some plan. Do you understand? Right? You just transferred your wealth to me. It wasn't a zero-sum game. I'm just trading the trend, man. Look, I'm selling high in a downtrend. I'm not a genius. But what kind of person buys in a downtrend? Someone that's probably trading a 1-minute chart and saw a scalp. Okay? And you became a liquidity event for my next short. Cool. So my intent is not to destroy scalping. I scalp into every single trade I make. Okay, do you understand? I scalp into every single trade I make. I think the highest time frame when I pull the trigger I'm looking at is a 5-minute chart. So I think most of you would consider if every single trade I make is either on a 1-minute chart or a 5-minute chart, then that's a pretty reasonable scalp. The only difference is I expect 300 or 400 pips, right? I expect 333 pips. That's what I expect. Is it because I'm so right? No, the trend is doing everything for me. Right? That's all I'm doing is I recognize the trend and I'm like, oh, I'll sell here and I'm done. And then, I'd sell here and then I'm done. And then, I'd sell here and I'm done. But I expect these to run. So after a day, let's say the next day I come to my charts and I'm up to 100 pips profit already. I'll move my stop to remove risk and I'm done. And then my next trade goes in. So the next day we're down here. So I move my stop to break even. And then the next day I'm on a third trade. And by maybe Monday, that's, I can move my stop to break even. And I'm just trading with the trend. You don't have to be a rocket surgeon for that. Okay? Yes, I worked at NASA. No, they didn't teach me how to trade. Damn killer wordplay. It's actually pretty good, right? If you don't plan your trades are worth less. Right? Well, I guess I have to start with the first statement. If you plan your trades are worth more. With no trade plan, your trades are worth less. That's pretty good, right? You like the rocket surgeon? Well, I said that to somebody years ago. And it was pretty funny because I read it in a book somewhere, and someone says, which is funny because in English the word is you don't have to be a brain surgeon, right? Or in English the other way of saying is you don't have to be a rocket scientist. So someone put it together and like you don't have to be a rocket surgeon, and so I actually said that to somebody at a meeting. I'm like, look, you don't have to be a rocket surgeon, and he looked at me and he's like, you worked at NASA, right? I'm like, yeah, for a couple of summers. He's like, well, then you were a rocket scientist. I'm like, oh, yeah, I guess so. Yeah, I guess so. Never thought about it that way. So I'm a rocket surgeon, right? But I'm not a brain surgeon. So that's funny, right? Touching the beard, man. All right. We got 30 minutes. Oh, I guess I really have to go in deeper. Let's go in deeper. So let's pay attention here. Your plan A is to sell off the 5 EMA on the 4 hour, let's say, And, well, that's probably the closest one. The next one would be sell off of here if you're using moving averages. The next one, you're going to look at horizontal. This is a price action based play. So horizontally, you're going to look at that. So if I were scalping today, this is what I'd do. 4-hour resistance. Why? I'm going to sell green candles. And 2, I'm going to, because green candles create high. Remember, I sell high at resistance. So I'm going to sell high at one of these resistance zones. So now I can drop into a 5-minute chart. And now I know where I want to sell. Now, my favorite place to sell would be this purple zone. Okay. Now, if you got to stretch a little lower, you're really on a small time frame now if you're doing this. And it's less ideal because really this is the best. Okay. Look how narrow this is and how slow this is moving after non-farm payrolls. Amazing, huh? So from this period, you have that. But since that last drop, you have this period. And look, it's barely doing anything statistically. Okay. Oh, swing trading group is swing.fxbootcamp.com. Thank you, Javier. Boy, that sounds like something I wrote, huh? It's funny, I haven't read that in 12 years, but that sounds like something I'd write. Gather intelligence, formulate. I think it was gather intelligence, formulate a strategy, execute your plan. No, execute your plan, exit your plan. That sounds like something I would have written. Yeah, just formulate a strategy. Yeah. So anyways, guys, I don't even know if we're going to get an opportunity on this. That must be FX Street screaming at me in the background somewhere, huh? Do we have 10 o'clock news? ISM today, maybe? Oops. Where is it? Economic calendar. Let's just check it. ISM. ISM services below 50. That's bad. That's bad, guys. Whoa! That's bad. That's, yeah, and shockingly fast, right? Holy smokes. We went from an awesome number to a bad number. And prices are stable, which is sad, right? But I guess prices can't go down farther. But yeah, that's sad, man. 44 is really bad. Okay. You know, and that's what happens is it starts where the restaurants close because of the virus. So then the woman at Applebee's loses her job, which means she doesn't go to Supercuts to get her hair cut, which means the Supercuts person doesn't drive to work, so they stop buying gas. And the gas station goes out of work because they're not selling Coke Zeros and Rock Stars. Okay? So that's interesting. So FX Street moderator can post the swing trading group but not the other one. I don't understand why. It's very interesting. Okay, what is ISM? ISM has to do with purchasing managers. And they're surveyed about their activity, like planning future purchases, the purchases they recently made, and all that kind of stuff. And typically what we do with this is in the United States of America, 70% of the American economy is consumer-based, which means when China went into COVID-19 isolation, it didn't affect America. When Europe entered their 20-year depression, it doesn't affect Americans. If anything, BMWs get cheap. Okay? Doesn't affect America because most, like I just explained, most of America is the woman at Applebee's that gets her haircut at Supercuts, and the Supercuts person buys something at Shell gas station. Probably not Shell, it's too expensive, right? And then the Shell gas station person eats at Arby's. And the Arby's people, I don't think they eat at Applebee's, but whatever. And, and that's it. You get a small town that exists because there's a small town. So, anyways, when you're doing your model for non-farm payrolls, one of the things you can look at is ISM non-manufacturing. Non-manufacturing means the service sector. I don't know why they just don't call it ISM services, but that's what I call it. And then you can open this up and look at the employment subcomponent of the ISM Services Purchasing Manager Index Survey. And from that, you can include that data and the trend in the data more specifically in your model to predict non-farm payrolls. Okay? What is this? This is like the wrong link, FX Street. Transform your team, online learning, membership. What? This is the wrong link. Career Center, corporate service, online learning, certification. What the heck is this? The mastery model? I think they changed the link on you guys. Advertise with us, site map. Conference, training calendar, membership. I don't see the release. Here it is. ISM report on business. This is what the link should be. Certification.content.cm. Wow. All right. Oh, is that it? So really, FX Street wants me to go to their analysis. Here's the problem. I guess I shouldn't say it. I do all my own. I'll say it this way. I do my own analysis. I don't read anybody else's stuff. God forbid I might trust their analysis. So anyways, yeah, check the calendar team. You should get them directly to this. I don't think most people would find this link. You got to get right to the, anyways, report on business. So check this out. Here's the headline number. And this goes over things like production activity. Do you think that's important? If you're analyzing whether you should invest in this economy or not, are factories manufacturing stuff, and do they think they'll manufacture more in the future or less? That will give you a pretty good indication of how the business cycle or business culture is at the time. Are we getting new orders or lack of new orders or not getting any new orders? And then what we're looking at is the employment subcomponent to the headline PMI number. So you can jump to, right, here's your inventories. It's another good thing to watch. If inventories are getting low, do you think they're going to slash their prices? No. If inventories are high, do you think they're going to slash their prices? Yeah, right, that kind of stuff. But what we're interested in particular with non-farm payrolls, is to look at the employment subcomponent of the PMI index, ISM PMI services. Okay, so we're not really interested in manufacturing. It's less than 7%, right? So we're interested at 70%. Anyways, so March. Okay, wait, this isn't right. What am I looking at? Index. What is he? This is all negative. This isn't right. Production index. What? It wasn't in the 40s. That can't be right. What? Percentage higher, same percentage. net. I'm reading this one wrong. That's weird. Anyways, that's what that is. I don't know why those don't look right to me. 44? This is right. 50. Okay. I don't know what it's doing. I just had a brain fart. I think what I did is I looked here and I looked here and I skipped these. All right. So yeah, this looks right. So we were at 54, which is a good number. 50, which is not a good number, but anything over 50 means business is a little bit better than before. This is a lot better. This is sort of, it's about the same as last time, but that's not bad. But anything less than 50 is contraction. And so to drop, that's a really bad, okay, that's a really bad thing. Okay. Okay. Right? So dropping below is a big deal. Now, keep in mind this is a survey of what people think, and people is smart is the nice way of saying it. This had to do with drops in the market, and it kind of freaked people out. So they're like, oh my God, maybe I shouldn't buy, right? But this is a pretty shocking number. This should be 54.8, not 44. But I do remember there was some fear in the market at that time, and you can see it was influenced. But okay, so that's what ISM is, guys. Institute for Supply Management, Purchasing Managers Index. And in your analysis of non-farm payrolls, you look at the Institute for Supply Management, Purchasing Manager Index for non-manufacturing, and in particular, their employment subcomponent. Okay? Now, this is an interesting way of looking at it as well, because they tell you the number, the headline number, where we were a year ago. No, it was March, February, I guess. See, that's 46. Interesting. That seems wrong too, but anyways, it still seems wrong. The change, and then the direction and the rate of change. So we very suddenly started to contract at a faster rate than what we've seen. So you can get faster and slower and contracting and all this kind of stuff. So it shows you relative information too. So it's very interesting stuff if you're an economist. Okay? And this, you can almost let's say here's potential GDP. Okay? And in that, you have down cycles, up cycles, down cycles, up cycles, and right now we're here. And so these things are important to try to figure out where you are, actual GDP. So we'll call this GDP, and we'll call this GDP prime. And it helps you figure out where you are in the cycle. And this creates a business cycle, by the way. We're talking about a business cycle. So this could come down for a year, but maybe by 2021, you're buying low and holding for the next decade. So this cycle from here to here could be 10 years. Okay? And really, what the Fed does is the Fed tries to keep you here, where actual GDP, headline GDP, not real GDP. So you can have real GDP too. And GDP is like GDP minus or plus inflation. Okay? But just headline GDP versus potential GDP. The Fed is trying to raise interest rates to slow things down to keep you at potential, and cutting interest rates to zero when you're below. The thing is, we're not really below. This is an exogenous shock. Okay? By the way, every time I say exogenous, you have to do a shot of tequila. Tequila! Okay? BTC, sure. Let's do some biddy. Let's do some biddy. We'll end up with Bitcoin, I guess. Maybe we'll squeeze some Goldie in there. Gold and Bitcoin. Gold. All right. Cool. There's our top. And she dropped. So, what do you think is going to happen next? Well, let's zoom in. And you have to analyze what we're doing now. So from the drop to now, there's a slight rise. By the way, guys, standard deviation, standard deviation. Oh, snap! Okay, so that's where we currently are, but we don't care about where we are. We care about where we're going. Okay, so what we care about is if you were a bear, you're going to think something like this. Now it comes down to your methodology. So let's skin this rabbit a few different ways. Okay. First way we're going to skin this rabbit is we're going to look for obvious resistance. Okay. There's that if you're using price action. If you're using Fibonacci, you're going to look at this. And you'll see it's the same thing. This is a 382. This is a 50%. Okay. You could let it go as high as a 618. So you can measure it this way, let's say. Okay. You might want to look at this area. Okay. And say somewhere in here you want to get short if you're a bear. Now, the problem with this is it's a trend trading setup. Sometimes you have to ask yourself, on the longer term, is this truly a trend trade? That's what you're going to have to decide. Are we trending up? Are we trending down? Or is this just a giant sucking sound of being in a range? I don't know. So you'll have to make a decision. But if you're a bear, you believe it's down ranging. So the old high was 11,000. Now we're at 7,000. Are we going to be on our way back down here? And the current target, if you're a bear, is less than 3,000. How many people think that that's what's going to happen next over the next 2 months, 2 or 3 months, between now and June? How many people think that that's what's going to happen? Let's take a vote. How many people think in the next 6 months Bitcoin will drop to 3K? And how many don't? It's a yes or no binary question. Please answer yes or no. There's no maybe. Okay. So with that in mind, we know we're in a pretty close price if you're going to be a bear. Let me show you the same analysis on a different chart. I think I have it here. So we're simply in the plan A still for our original plan. The target next week is to tickle 5,000. And by the end of the month, drop to 3,000. For a minimum of $3,000, maybe $4,000. We planned this out last week. Okay? You might have traded it here and you're sweating bullets, or maybe you're out, but we're still waiting. Now remember, the other one was higher, right? That's our plan A, and I think the other one is closer to 10K, but that's already happened. You have to understand, like, that one is already played out. So we already had this as a sell. So if you're a bear, you're probably looking at this as a follow-on second trade, because it was way up here earlier. Then it came up, and then you sold it. Then it's way down here. Now it came up, and now you're looking to sell it. Cool. All right. So how many people want to do gold? It's funny. Will gold go up or down? I don't know, but that's why we do analysis, right? Cool. Gold. Let's do gold. All right. So for the last 2 weeks, I said gold is likely to go nowhere, but you need to decide if you're a bull or a bear and you want to take it down to a standard deviation. But that's trickier than trading from a standard deviation. Okay. But anyways, let's do this. Let's thread the needle. We opened at the central pivot, which is interesting because if you're a bull or a bear, both of you guys trade at that price. That's the problem. That is the problem. Both bulls and bears would buy there, so you have to have a pretty good trend. But the thing is, we don't have a very good trend. So right now, this is where bears would sell. So let's delete this and put it differently. This is a sell zone. And this is a buy zone. And the calculation here is the weighted mean based on the high, low, and close. The weighted mean plus, or in this case, minus one standard deviation, one, right? If you're a buy zone, right? Minus the central pivot divided by 2 equals a buy zone, which we call M2. Or if you're a seller, high, low, close divided by 3, creating a weighted moving average, then one standard deviation above the mean, right, minus the central pivot point divided by 2 equals an M3. Pretty simple math if you have a PhD. So that gets you to, if you're a bear, you're going to sell high at resistance. This is market resistance. This is price resistance. So if you're a bear and then you see it roll over on a 1 minute chart, scalp it. I got a scalp. I got a scalp. Give me the juice. Doesn't work that way. Doesn't sound as good anyways. Give me the juice. Oh, no way. Am I a moderator now? I'm a moderator. Can I post a link? Anyways, and the other way is if you're buy low off of market support, maybe here, but this is actually the deviation, which tells you there's a slight trend in play. Oh my God, I'm a moderator. Let's test this out. Moderator made me a moderator. Maybe I can be the second best moderator in the world. Let's test this out. Can I post my own link? Can I post my own link? Let's see it. I doubt it. Whoa, dude. There it is. 76%, 76.5% discount. Nice. See? Best moderator in the whole world. That took a lot of effort and a lot of thought, probably lots of research, phone calls, YouTube, tech support. Dun, 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 dun. That's awesome. Bum, bum. Right? There's this one. Bravo, 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 bravissimo. Bravo, bravissimo. Bravo, bravissimo. Bravo! So anyways, cool. Okay. There it is, guys. 76.4%. Instead of 1,600, it's less than 400 bucks, guys. Less than 400 bucks. Less than 400 bucks. So this is only because of COVID-19. This is only because you're locked up at home. Your kids are driving you crazy. Your spouse is making you nuts. Now you got twice as much stuff to do around the house. And you're like, no, I'm sorry. I'm studying Forex. I can't, baby. I'm sorry. Yeah. So, no, that's cool. This worked out really fun. Okay. So, again, watch this. $1,618 right here. Enter the promo code COVID. Watch, it's still 1,619. As soon as I hit the 9, watch this. Boom. Soon as we're out of this, I'm pulling that price. There's no way I'm going to do that again. But we're in a global pandemic and you guys are locked in your house. This has never happened before. And I'm worried that you guys are freaking out and you don't know what to do and you're alone and all this kind of stuff. This is my way of like making sure you have a Forex social safety net. Yeah, actually, in the day trading course, there will be, I'm not sure if it's on this yet, it'll be later today, the downloads for the new template. So if you want this version, no, not that one, sorry, wrong one. This version, yeah, that'll be there. Daniel, yeah, where are you? South Africa? South Africa is just always a problem. What can I say? For some reason, the world thinks South Africa is risky. Oh, Romania, huh? Anyways. Like I said, if you guys join the live trading group, We used to meet once a week. We're actually meeting daily now, guys. So you're going to get prompted like, hey man, do you want to join the trading group too? And it says we meet every day, once a week. We actually, right now for the next couple of months, we meet every single day. Again, I'm worried that traders are freaking out and they're going to make mistakes because they're isolated, they're at home, they don't know what's going on, the ranges are so big, the media is so hyped, and that there's more than likely an opportunity to blow up your trading account than ever, but you're supposed to be making money right now. So without increasing any fees, I sent out an email to my live trading group and I said, instead of meeting once a week, we're meeting every single day, including Sundays, because I want to be around and be available to help people in this situation, these unprecedented times. And no, I did not raise the price. But because meeting every day, that wouldn't be swing trading, that'd be day trading. So I included the day trading course to all my paid members for free and meet with them instead of 1 hour a week, 5 or 6 hours a week. I did not increase prices. All those extra meetings are free, compliments of the firm. I'm doing absolutely everything I can during these crazy times to make sure not only you survive, but you thrive. There's nothing more that I'm able to do. So right now, a 76.4% discount on every training video I've ever made. And then if you join the trading group, 400% increase in meetings, maybe 500% increase in meetings. And then on top of that, the initiation fees waived. Like, you either are not interested or you're dead broke, you have no money. And I can't help you either way. But if you're going to look at Forex as your opportunity to provide for your family and create a business from, I got your back, dog. I'm giving you everything. My own family feel like I've been spending too much time with my Forex traders. That is not a joke. My own family, they're like, we need you. And I'm like, I know, and I'm trying my best, but other people need me too. So I'm at night in the Asian session with my trading group. Sunday afternoon, I'm with the trading group every single day. And then I'm doing my daily webinar. And then sometimes I'm doing other webinars and I'm doing all of this. And even my children are looking at me like, you don't spend enough time with us. We're locked up at home and we never see you. My wife's like, dude, too much. I'm like, well, I'm keeping people alive. We're alive. We're fine. My family's good. I'm keeping other people alive. So that's the stretch I'm making. Doing all of that, and I'm a trader, and I'm a full-time Harvard student, and I'm a dad, and I'm a husband, and everyone is contributing as much as we possibly can. So I hope you join. There's nothing more I can possibly do. Am I a scammer? Well, FX Street is the most trusted source of Forex information in the world, and I've been working with them for about 16 years. Doesn't sound illegitimate to me. So whatever, don't sign up. If you're scared, if you're worried, if you've been scammed, don't sign up. I can't handle your negative baggage anyways. But if you need a community of people to take care of you, we got that. So, I want to thank you for the last 3 hours of your time. I hope you consider it a wise investment. I want to thank FX Street for 14 years of just this one webinar, Trade Non-Farm Payrolls Live. 14 years of just this webinar. And that's longer than your last guru has even been trading. I want to thank our moderator for the extraordinary awesomeness that she put in today. to provide that link and all that kind of stuff. That is an extraordinary effort. Top notch, 100%. If you need a broker that wants you to succeed, tradersway.com. I work with people every single day, tradersway.com, every morning, 8 a.m. New York time. Thank you to Traders Way. So if you need a broker, check them out, tradersway.com. Create a demo account, download MT4, place a bunch of trades. You'll see the execution speed is fast, the spreads are narrow, the swaps are big. Give them an opportunity to earn your loyalty and respect. And have a wonderful weekend. And to everyone that joins the live trading group, I will see you Sunday at 6 p.m. And if you took advantage of the 76.4% discount on the videos, then this weekend you're going to watch. It says 35 hours. I wouldn't be shocked if it was 50 hours of videos, honestly. So good luck. Watch all the videos and then watch them all again. And by the way, when you join the live trading group, you'll also have, if you want, probably 30 more hours of videos to watch of us actually setting up live trades. There's endless amount of support that if you need it, everyone is doing the best to take care of you. FX Street loves you. Traders Way loves you. FX Bootcamp loves you. I love you. Be safe. I'll see you. Cheers.